What's going on, guys? Welcome back to the channel. After a crazy week of volatility, the question now is the bull trend confirmed? So in this video, we're going to review several counts for the SPY and the Qs, and we're going to try to determine if this is the case. So before we dive into the analysis, you guys already know what to do. Give this video a thumbs up, subscribe to the channel, and do me a favor, hit that bell icon so you'll be notified when I upload the videos. So let's take a quick look at our bullish count out of the SPY. So as always, we already know that we've been in correction since November the 22nd of 2021. So the way we're looking at this, guys, is that this is a W wave, 3-wave pullback into the X, and now we have a 3-wave pullback into the wave Y of 4. Now, the case could be the following, guys, right? In that out of our January the 24th low, okay, we made our ending diagonal wave 1, which is valid. Then we have our 3-wave pullback. Let me zoom out here. Then we have our 3-wave pullback into the wave 2. Then we have a 1, 2, 3, 4, and wave 5 of 3. Now here's where it becomes a little bit tricky. We gapped lower, and then we held the previous wave 1 high as our support. We didn't close right below it, okay, which is good. I know we crossed the line ever so slightly by a couple of points, maybe 1 or 2 points, but we didn't close below it, which is what's more important. All right, and then we see a bounce out of it thanks to Amazon's report on Thursday and Snapchat. We see some life back into the markets. However, we made a rally up today, and now we're pulling back. So we're going to focus on this area here to determine if this is the wave 4, and now we're gearing up for the wave 5 of wave 1. So let's dive down to the 15-minute time frame, and let's reset the chart and let's zoom in. Now, we have what appears to be our directional wave 4 pullback, right? We have a sideways correction here, and now we have a directional one. Okay, so this is displaying the guideline of alternation quite well, right? Where one says that if one correction is sideways, the other correction would be pretty much straightforward. Now, the question is, do we see 5 waves out of the lows in the response from a corrective completion? And the answer could be yes, right? So the way we're looking at this, actually, let's go down to the 5-minute. All right, so we have our first wave, our 1, 2, 3, 4, and 5. Now this is clearly 5 waves up. However, we are now pulling back in 1, 2, and 3, or this is maybe the first A wave. Okay, so to understand, maybe this is the start of our minute degree wave 1, 2, 3, 4, 5. Okay, so we go down to the minute degree, and perhaps that is the case. Okay, perhaps that is the case, that we are looking at a possible wave 1, a pullback in 2, 3, 4, 5 of minor degree, all right, of this degree here. So in order for us to understand whether or not this is going to validate, we must take a retracement from this lows to these highs, right, and see that anywhere between the 50 to 61% retracement could be our zones of support, right, to start heading on higher. Now our invalidation comes obviously at the break of the previous wave 4, which was the origin of the wave 1. So we have our work cut off for us for next week, because right now it is looking very, very slim, right, where the bulls are fighting for dear life to hold the line in order for them to take us to the promised land, if you will, right? So we're close to overall invalidation because we can't be, crossing below this wave 4. So 448 and 447 are going to be our key levels coming into next week. However, I'm not too convinced just yet. I'm not convinced just yet. Although price action is pretty much impulsive out of this low, but this pullback was pretty much directional. All right, so let's take a look at our bearish count, and let's make a case for it. Maybe we are going to see for the lows. Okay, so same deal. Out of our November, actually, instead of our correction starting on November the 22nd, we're calling this the correction starting on January the 4th. All right, so in that case, we shifted one swing over, right? So we have our A, B, and C to the W, A, B, C to the X, which, take a look, right? The X, if we take our retracement tool from the high to the low, came in at a 618 retracement resistance, right? Then we pull it back. We made our first wave 1, our wave 2 pull back into another 618 or 452.70, and now we're pushing on lower. So if, guys, if on both bullish counts and bearish counts, Okay, we're gonna put these guys sideways, side by side. The line is clear, right? If we break these lows on both counts, right, which this won't be here on February the 4th, this is February the 4th. If we break 443.83 or 443.98, one of that range, right? 448, let's call this, let's be precise, right? 443.98. Okay, if we break 443.98 on the bullish interpretation, then we are only left with one choice, right? And that is to consider that we are now pushing on higher to the wave A of wave Y, okay? Which means that we are still in correction, which means that we make our first A wave, 5 waves down to the A, then 3 wave pullback into the B, all right, wherever this lands, and then we see our final 5 waves of wave Y of wave 4. So in other words, we are not out of the woods just yet, ladies and gentlemen. So I know this week, the last couple of days have been pretty much exciting, but just bear with me, just bear with the market, be a little bit more patient. We can't jump the gun just yet. It's still not looking promising. All right, so let's take a quick look at the Qs, because in the Qs we also have an alternate scenario. All right, so let's jump over to the Qs. Let's jump over to the Qs. Our wave counts here are gonna be under here. So we have our if you guys look over here on your right hand side, we have an expanding triangle sort of scenario. But let's take a look at our bullish count first, and then we'll go back to the expanding triangle scenario. So in this chart, we're still also considering the same thing, right? November 22nd highs, A, B, C. Okay, the difference with this chart, because we invalidated the wave 4, is that now we're considering that perhaps, and this is a little bit pushing it, right? I mean, I don't like doing this. I'm forcing it, okay? And many can argue that that might be the case, in that since we broke the wave 1 highs, right, on our bullish count, we invalidated the entire structure. But I'm not considering that perhaps this, which is valid, that this was a truncated fifth. So the way we're looking at this, guys, is that out of the B wave, we made our first A, B, all right, 1, 2, 3, our fourth, and then truncation in fifth, which is okay, all right? It's not uncommon. So we have our first fourth wave, which, you know, came in appropriately at between the 38 and the 50, okay? And also, it was our previous wave 4 pullback support. So we have some sort of confluence here that are aligning with what we are trying to have an outcome for. So out of our lows here on January the 27th, this happens, right? We have a 1, 2, 3, 4, and 5 for the wave 1, ABC to the wave 2. We're holding the 50% retracement. Now the question is, if we hold this, right, this could be either an A, B, and C for wave 2, a deeper wave 2, or anywhere somewhere here. And then we go. Again, just as long as now on this wave count will remain north of January 28th price action, because this was the origin of the wave 1. However, this is still valid, right? Now, in the event that we start pushing on lower, then maybe our best case scenario is an expanding triangle, right? In the wave 1 of an intermediate degree. All right, so this is 1, 2, 3, 4. We see another low, right? As long as we maintain north again of January the 28th, if we maintain north of this, then both counts are still valid. So we have 3 wave pullback. We still see another low. The rules for this is that wave 4 has to be larger than wave 2. Okay, so in this case, we got to see from the highs here, we have to see about a 6%, 6.7% of a retracement, whereas we see from these highs, we see a 5.25% retracement. So we're still not there yet. We may see some reaction out of it and head on higher. This is just a scratch count. I don't think this is the case. I'm more leaning towards the fact that we are going to start heading on higher. Okay, guys? And then we have our bearish count in the Qs. And our bearish count in the Qs suggests what? Just like in, oops, it's right over here. Just like in the in the SPY, all right? We're looking for our first A, B, and down in C. So, look, guys, you see, there are a lot of scenarios going on. There isn't one straightforward way of looking at this at the moment. And best bet is to sit on the sidelines. Best bet is to be patient and try to whether this the storm out, because we can go either way at this point. All right. So if we see price action continue on higher on our bullish counts, okay, if we see price action continue on higher where we see this wave 2 or the beginning of wave 1 take out the wave 1 high here, meaning the wave 1 of 3 takes out the wave 1 of the minor degree, then at that point I will be leaning more towards a bullish outcome out of the market. Okay, it's okay that we don't have to catch or capture all of this move, right? Because we still have half of this move for the wave 1 to complete. Okay, and if we miss wave 1, see, this is the thing, right, about Elliott wave. Wave 1 is about determining whether or not we are going to be in the trend. Wave 2 is to actually try to see where we can bounce to capture the move, which is the wave 3. All right, so wave 1, we are investigating it. Wave 2, we're going to confirm it, and then wave 3, we make the profit. All right, guys, so I'm gonna leave it at that for you guys. I hope this was a bit useful to you. If you enjoyed the content, please give me a thumbs up on this video, subscribe to the channel, and alternatively, if you guys want to join Trending Waves, the link to the Discord group is pinned down in the comment section. As always, thank you so much. I'll see you guys on Monday, and have a great weekend. Take care. Bye-bye.